right, guys. I just got a glimpse at the questions 5 minutes ago because Pablo left. But the idea of the panel is to learn about the DeFi opportunities in the different ecosystems that you represent, and also have the vision of a company like Bitpanda that provides the backstage, the back end of technology for a lot of the institutions and retail, the ones who use crypto. And the first question is around how does what you see happening in Latin America, the adoption of payments for so many uses based out of a real world need, impacts the kind of projects that you prioritize, or how your ecosystem is prioritizing DeFi?
Yeah, definitely. Yeah, thank you for having me here. It's fantastic. My first time in Buenos Aires as well, so yeah, great city. But yeah, sort of stablecoin adoption has been sort of like a centerpiece for a lot of the issuers that we're engaging with, right? So microfinancing, peer-to-peer lending, projects like that. There's a big emphasis on utilizing, USDT and USDC, as a form of collateral as these loans are made, right? One of our partners is Aptos Labs, and Pact does typically like $10,000 to $50,000 USD loans to small and medium enterprises, right? So, smaller companies in Latin America, Africa, et cetera. Loans are made mostly in USDT. Transactions are recorded on, Aptos. And, really the thought process is like, let's take the sort of fluctuation in currency kind of out of the equation, right? Let me get to a borrower that likely wouldn't have access to global capital markets, and then, doing it on stablecoin makes it, that much easier. So yeah, see a lot of opportunities for, cross-border sort of debt and equity plays, and then we'll continue engaging with groups in LATAM, Africa, Southeast Asia, et cetera.
Yeah, I mean, on the development side is mostly on interacting with partners in Latin America, that on which our ecosystem can pretty much rely on them towards onboarding their own restake tokens, in this situation LBTC, not directly the Babylon BTC. But pretty much what we've been doing is focusing on Latin American communities, Brazil as well, Argentina as well. I mean, it's a huge market, and as you said, comes out of real necessity. Meaning, I believe that in the last 3 years, we saw $1.5 trillion in volume for crypto, and in Brazil, 90% of that is stablecoins. So, I mean, one of the barriers that we do have for Babylon itself is that we're still trying to figure it out. That's something that can match our ethos of being completely trustless, is having stables on the Bitcoin network. So that's the current, the biggest friction for those who want to interact with Babylon. But for those who want to interact with our ecosystem of LRTs, it will be through partnering with centralized exchanges with a big presence in Latin America, just as Bitpanda, for example, to give them access to Bitcoin in a trustless manner. So that's the outlook that we have. No, yeah.
Okay, so first of all, thanks so much for the invitation. Great event, great venue. So I'm representing Bitpanda. For those who don't know Bitpanda, we are probably the biggest investment platform in Europe. We are a broker, we are not an exchange. Many people think we are an exchange. And what means that? We have a huge portfolio. We started as a crypto 10 years ago, but we become as we become very regulated, we also started to deal with non-crypto assets. So currently we list around 700 crypto assets and around 3,000 non-crypto assets, which is securities, commodities, ETFs, metals. So what is the story? Bitpanda has been very successful in Europe and in the retail, so in the B2C. And they figured out a few years ago that it could be a good idea to get their whole technology on a white label solution and scale with partners. Then the B2B division, which is Bitpanda Technology Solutions, was created. And that's what I'm doing here in the region. I'm representing the B2B division. And I'm trying to scale and support traditional financial institutions to their roadmap into crypto. So we provide them technology and liquidity they need. And of course, stablecoin is the main actor in this conversation since all this story began a few years ago. And it could be either on the investment idea of providing an infrastructure for their clients to hold assets in stablecoins because of the inflation or because they want to diversify their investment portfolio. But also, of course, we have been seeing this in the previous panels because of the cross-border business in the region. So the idea of the stablecoin sandwich has become very popular in the region. So what many banks and institutions are trying to achieve now is having their own infrastructure to sort of work on this idea of the stablecoin sandwich. So for those who doesn't know what it means you have in one side an on-ramp for fiat to crypto, and then you have the crypto, which is the stable, and then in the other side, the off-ramp from crypto to fiat. That's the idea. So we are helping companies to achieve that.
Good. The case of Babylon is particular that you were coming from BTC-Fi and going into payments. How do you manage that transformation from through the whole process? Last year was the year that you started gathering TBL. It was impressive the success that Babylon had on that that year. How do you see that going forward into integrating with these cross-payment functionalities and TradFi?
Yeah. Well, in the particular case of Babylon, since we've been building these, ethos of being trustless and non-custodial, we've been mostly focused on, the BTC product. Now we've been announcing the trustless Bitcoin Vault, which allows people to pretty much on a non-custodial manner use their BTC on Ethereum, for example, on lending and borrowing markets such as Morpho. Okay. So that's where we see the biggest kind of like collaboration with stablecoins, allowing people to using their BTC on the most safest manner possible to tap into borrowing USDC, right? So I would assume that the biggest problem will be, those who are really in need of taking care of cross payments would be our ecosystem, such as Lombard, Solve, you name it, and which, as far as I know, they've been mostly relying on centralized exchanges towards on-ramps and off-ramps and towards allowing users to tap into their products. So that's how we've been kind of integrating, and we always see pretty much our products going into, crossing with, yeah.
Very interesting. And that's related with another question that we have for the panel. There was the on-chain loans. On-chain loans, Latin America is a region where having access to credit is very limited to a lot of people. And how do you see on-chain loans being deployed in Latin America? Have you seen specific projects focusing the region? Like we want to see what are the specific use cases that you will see for on-chain loans in Latin America.
Yeah, I can also answer. I think for lending and borrowing, again, I've said this before, but we are pretty much focusing in a few communities around Latin America. Specifically, one of the communities we wanted to dive in more was Brazil, and such. I think again, like I was saying, I think it will be upon relying on partners in the specific region towards. Mostly on the marketing side, getting people aware of the product. Our product is more towards the kind of like the BTC Maxi, right? On which they care about the self-custodial side, on which the problem of on-ramps and off-ramps is already kind of like taken care of for them. Their problem is the risk side, not so much on tapping into Bitcoin. And I think what we are pretty much allowing them to do is to tap into other sources of incentives across other chains via the trustless Bitcoin vaults. So I think, yeah, we don't have that much concerns on the stablecoin side, apart from the fact, like I've mentioned as well, that people cannot acquire BTC with USDC on the Bitcoin network. That's our biggest friction point. And that's something that, as of now, we haven't focused on because we have the trustless Bitcoin vaults, which is the core product we need to develop first. But after, we will certainly think on how we will achieve that, because from a technological standpoint, that's going to be complicated. So yeah.
In Aptos, I know Aave launched recently.
Yeah, I was going to say Aave is a good example. And then kind of stepping back, when we look at our layer one, really we have three main focuses. So one is money movement. That's where stablecoins really come to play, right? USDT, CE, PYUSD, right? USD1. So these are all like issuers, that issue their product natively on Aptos. We do probably about $60 billion in stablecoin transactional volume in a month. Second pillar is RWAs. So, when we think about some of our platform partners, right? Aptos Labs, Aave, et cetera, their kind of TVL and other products hit that chain or hit that pillar, and then we try to create as much interconnectivity with other issuers in our ecosystem. And then the third focus of ours is data transformation, and then again kind of fits into that similar bucket where we're looking to do innovative things on chain, where you typically use Web 2. So another thing that we like is peer-to-peer lending. So we're exploring a couple peer-to-peer lending partnerships in other domiciles. We'll likely be doing stuff in that sector in LATAM as well. So I think that's kind of our perspective, right? We look very globally, and then we kind of apply similar philosophies, in different, jurisdictions.
That's a change from like being able to use Aptos as collateral on Aave to use Aave on Aptos with other collaterals.
And we do a lot of kind of interconnectivity with like our partners, right? So, Franklin Templeton's Benji product, right? BlackRock's Biddle, which are both tokenized money market funds. We get a lot of like, hey, how can we do something innovative, right? Looping strategies, et cetera. Can we get an introduction to this group? So, I think, we see a lot of, lending protocols, but also just groups wanting to do, sort of TradFi things in a more of a DeFi manner. And then we're also incubating a perp DEX called Decibel, right? Which will do, perp trading, right? And also spot trading. So again, trying to create a little bit more, connectivity among, different issuers.
Earlier in the morning, we had a panel about real-world assets. What can you tell us that it's happening in your ecosystems regarding?
Yeah, definitely. So on the RWA side, and I came to Aptos about 6 months ago to head up a lot of our RWA initiatives. Prior to that, I was working for a US broker-dealer called T0. So similar to, Securitize, they were looking to take private securities and then using traditional broker-dealer infrastructure allow for capital raising and or secondary trading, right? Let's tokenize this private security, allow it to trade more broadly, or potentially allow it to raise capital more broadly. So we're doing a lot of partnerships with T0-like companies. Good example of that is with a company called Republic. So Republic is a good company that kind of spans both sides, right? They have the regulated infrastructure for things that are going to be treated as securities, and that's where they could, go for a global distribution through, a securities offering. If you wanted to do a non-securities offering and just launch on their launch pad, that's an option that's available to you. So we're going to be doing a lot more partnerships like that in the RWA space that span regulated products, unregulated products, and then, a lot of these counterparties can be good stewards to their underlying issuers. And the underlying issuer could be, tokenizing real estate, tokenizing artwork, tokenizing a private company, whatever it may be.
So my view on this. So I think there are two main aspects here. One I heard about in the previous sections is the user experience. Maybe if we came 2 years ago here, all the conversation would be on protocols, on CBDC, but nothing about the user experience. And now people are starting to realize that in order to have a mass adoption, we do really to put the user in the center, right? So I think this is one direction, and I think it helps this direction, the idea of having a local pegged stablecoin, like the BRL in Brazil, the ARS here. So this is an element of the UX, because in order to have mass adoption, it would be really hard for people doing anything that is not based on the currency that they know, they understand, they live with. So I think this is a very important development on the last 2 years, I would say. And linking this to the idea of this, you asked about loan. I think that I have an idea of like a pyramid. On the base of the pyramid, we have these stable coins. That's the basic infrastructure that we need to have mass adoption in the digital space. So we are achieving this moment at this point. We have stable coins. We have 300 billion volume in market cap of stable coins. Of course, the local stable coins are still in the very early stage, but I think new use cases will develop them. And once we have this base of the pyramid, we enable like the next step, which is RWAs. I think RWAs is the biggest next step I'm seeing. So we have a relevant number of use cases of RWAs tokenization in the region, especially in Brazil. There's a lot going on there. So we have this corporate debt, we have financial instruments, collection instruments being tokenized. We have real estate. Real estate, it's something that the potential is so big. But for a lot of that, stablecoins is an enabler, because in order to have really get the benefit of the tokenization, you need the digital currency to be there to make the atomic swap, to avoid the risk of the counterpart, right? And then I think when these two things we are seeing already mass adoption, then I think it will come the last step, which is DeFi. Because I think DeFi, in the end of the day, for example, loan, and my background is from the financial industry, is very, very reliant on guarantees, right? So what people, when we think about mass adoption, will use to get a loan, they will use their house, they use maybe their car. So they need these elements to be already tokenized in order to be used as a guarantee on the digital space. So that's a bit of my view. I think we are still on early stage, but yeah, I think we're gonna get there with these elements and focusing on the user in the center of all of this.
In Babylon in particular, are you having any projects related to RWAs?
No, at the moment we don't, but I actually have a question. Specifically on the RWA market, especially in Brazil. I mean, RWAs, personally, it's something that I've been following for the past few years, during the times of Goldfinch, Centrifuge, etc. Especially on real estate. I mean, you've mentioned other assets. I mean, watches, cars, you name it. And what I'm curious about is, for example, Brazil. Are mostly Brazilians looking into exploring other RWAs or assets in other countries? Is it local? Are you guys seeing mostly external people from other countries to see it as an open door into investing in Brazil in a more decentralized way? I think this is something that I think it's a good question.
Yeah, totally. It's indeed a good question. So right now, at this moment, it's very domestic. So we see a lot of players in the market creating these RWAs, originating these RWAs and creating demand for them. So there is a thing that has become popular in Brazil in the recent year, that is the digital fixed income. It's the term has been created by Mercado Bitcoin. Not sure if you have ever heard about. Yeah, it becomes famous. Well, what these guys have done, nothing more than they tokenized, for example, a corporate debt or a financial instrument, for example, credit card receivables, boletos receivables. So they create an investment fund of these assets, and they have created this fancy name of digital fixed income. So they abstracted everything related to blockchain, tokenization. They just say digital fixed income, and the adoption has been huge. Other players are already using this name, and you see already some traditional financial institutions distributing their not only their assets, but also assets of other originators using this name. And because of the high interest rate, right, people are investing on this. So I think this is a big use case. And this use case has already made some of these players think about and actually doing experiments of offering these assets offshore. So in markets like Europe, of Asia, they are trying to distribute these digital assets originated on Brazilian financial instruments, let's put it like that. And of course, there is also a trend of Brazilians to invest offshore because of the political or the economic issues. So many Brazilians are investing offshore. Of course, they are looking also on elements that are being generated in houses in the US, in Europe, so which are connected to euro, to dollar, in order to save to diversify their portfolio. Let's put it like this.
Okay, very interesting, and that's related to the other question that that we had on the panel was regarding liquidity. What are the largest liquidity inflows that you see on your ecosystem, and what are the on the other side the largest outflows that you see on each of the ecosystems?
Yeah, I could kick it off, right? So we, I'm not the head of liquidity, but yeah, we maintain like strong relationships, right, with centralized exchanges, DEXs. We're incubating our own perp DEX, right, to do a bit of spot trading to kind of manage inflows and outflows a bit better across our product set. So yeah, look, I mean, there's different market makers that are included, but yeah, different sources, I guess, for layer one that we consider.
I mean, on our side, the major inflows are coming from centralized exchanges mostly, mostly towards the ecosystem, right? Not directly into Babylon. So when it comes to outflows, I would say that we will perhaps, I mean, yeah, let's call it outflows, but I say as soon as we release the trustless Bitcoin vaults, we will see a lot of outflows going into Ethereum for the incentives with the vaults by using BTC to borrow and do the looping strategies. And
you'll lock the BTC.
Yeah,
and
I would say that we will see. I think there's two sides. I think there's a side that everyone else from other chains, inclusive Ethereum, will now be able to get BTC and then using Babylon go back into Morpho or Aave or any lending borrowing and use that to borrow USDC. So I think that's one of the sides. I think, but the major outflows we will see into Ethereum will come through the BTC maxes and the BTC holders that we have. I think that's going to be, especially because from a risk perspective, the Bitcoin still remains on the Bitcoin network. So even for institutions as well, institutional partners, I think that's going to be something they will like, taking into consideration the incentives we have on multiple chains and not only Ethereum, right? So, but Ethereum will be the first step. So that's how we're looking into it.
I can tell a bit of the strategy that Bitpanda has been using. So one of the things is that we are an aggregator. So we have several liquidity providers behind us. So every time a user buys something, we give him a price that we obtain in one or more of these providers. We can even combine if there, for example, in an institutional client, if they quote something very big with us, we can get this liquidity for several providers in parallel. That's something we do. We call it, there's a technology we developed in-house called Fusion. And another thing we do, and that's has been very recognized on the B2C space, is because we really make it very easy. We remove all the attrition for users to invest whatever they decide to invest. So for example, if they have a Bitcoin on their wallet, and now they heard that NVIDIA has been doing something nice in a Saturday night or Sunday evening, they just go there and they switch total or partially the Bitcoin they have with the NVIDIA position. They don't have to off-ramp from the Bitcoin and then purchase the NVIDIA or wait until Monday with market opens to purchase the NVIDIA. They can do it Sunday afternoon. So Bitpanda has been doing a lot to manage all this liquidity internally and manage the risk. But in the end of the day, they have been providing a great user experience for the clients to learn how to manage the portfolio and removing all the attrition there. So I think these are the two interesting things that are being doing by the team.
It's interesting. In the morning, one of the cases that Seba Serrano from Ripio mentioned was the tokenization of bonds. And when the elections were here in Argentina, people were trading on Sunday.
And after the talk, I went there in the corridor and showed, look how we are doing this. And he got amazed.
Just to close, how do you see Latin America in terms of becoming a sandbox or testing ground for the rest of the war on crypto? And what things do you think global trends are going on outside Latin America might be adopted here?
I think Latin America and some other emerging countries such as South Africa and overall Africa, I think it's such a lesson that there's this search for real utility. It's like I think the adoption rate here is so much quicker than, for example, Europe, because people need it, right? And I think specifically on the stablecoin side, I don't have that much data on people wanting what are the volumes for LBYs here, but I think for stablecoins, it's like you said, I think it's a sandbox towards testing other ways to cross-border payments, lending and borrowing as well, different sources of collateral, exposing people from Latin America into assets from other countries such as the US, which is, I think, it's one of the biggest utilities. So I think it's insane, and I think it's one of those places in the world where I truly see meaningful adoption towards what crypto was meant to be, right? And not so much on the degen yield farming. I think there's real retail necessity here instead of the DeFi folks. So I think that's great to see, and I think it's definitely a testing ground to understand how quick we can make that adoption. What can we make from a UX perspective, from the educational perspective as well, towards even making it faster. Like what were the struggles that people here in Argentina, for example, went through to get access to their first on-ramps or to do the off-ramps, because they're forced to learn about this as quick as possible, right? It's a necessity. So I think going through the hurdles that they had towards using their first stablecoins, I think that's something we can incorporate into our US-based companies and European companies as well. There's a lot of lessons, definitely.
Yeah, and I totally agree with the notion of like global capital markets, and then to Rafael's point on Mercado Bitcoin, they make it very digestible, right? And we're having discussions with them on different risk spectrums of the fixed income duration as well. I think they have products that range from 3 months to 24 months, and that's a story that I think is very compelling for a potential investor, in the U.S., EU, Asia, et cetera. So I think you're going to see that, cross-pollination, like cross-border, I think investment, right? And then, digging into like different product types, whether it's, fixed income, equity, and then maybe more of the degen, DeFi stuff as well. I mean, we see that level of interest kind of across our platform. And look, we hope it, continues to evolve. The one thing I want to note is, some of these products, right, are slowed down by regulation, right? So some of the, securities products, commodities products, some of the real TradFi products just can't trade in a DeFi native manner. But, hopefully, 2, 3, 5 years from now, you'll have a little, more of that mix where a lot of TradFi products may be able to trade in, DeFi manner on DEXs, centralized exchanges, etc. But, who knows?
Yeah, to add here, although we call Latin America the region, it's a very diverse region, right? It's very hard to once you understand deeply how it works in Argentina, how it works in Chile, in Colombia. They are totally different markets with totally different stories, cultures. So we try to put them in some stories on the same bucket, but the reality is that localization here is really, really a must, right? So, and even the reason why, right? The reason why doing something on the digital space here in Argentina can be totally different than doing in Colombia or Mexico. So, and same goes on understanding the regulation or working with the regulators. So for example, we have the reality in Brazil with PIX, which has been a tremendous success. So anything you can think about of having some retail payment thing in Brazil using a digital asset, if the use case is payment, it will be really hard to compete with PIX. Because PIX is used already by 90% of the population. The mass adoption has been huge. So maybe the use cases there will come in different ideas of not really buying a coffee, right? Because it doesn't make sense there. But it do make sense in countries that still have a lot of cash. So I think this is important to understand the reality. So Colombia, for example, just launched their instant payment, the BREXB, which is, if you stop to understand, is different than how PIX works. Structurally different, right? It's not only the name, but how it works, how it was implemented. So maybe the use cases there for digital would be reasonably different than what we think to Brazil or Chile. So I think this is something to be aware. Of course, there is still things that the region looks a lot in Europe, in the US. So of course, the Brazilian, I'm sure, because I participated in many discussions, I'm sure that the Brazilian Central Bank, when they were thinking about the regulation, the crypto regulation for Brazil, they studied a lot the MiCA, everything we have in Europe, in the UK. But in the end of the day, they really learned that it's not only about copying, it's really just understanding and the concepts, the idea, and then think something from scratch to the country. And that's the good work I think it was done in Brazil about the regulation. That was also the good thing that has been done related for CBDC. So it was 1 year ago, I think probably the whole discussion here would be about CBDC. Everyone were talking about CBDC to be the future, right? So I think there was a lot of maturity from them for holding on the CBDC from now for several reasons. And one of the reasons I believe that because they started to see that stablecoin are increasing adoption, right? So, okay, hold on, let's see where this goes. And maybe later, having a wholesale solution of CBDC to settle all these different elements being used on retail will make sense.
Well, thank you very much for coming here. I know some of you arrived today after a long flight.
I'm still awake, yeah.
Thank you.